Well, I was reading a piece recently out of The Economist. Not that I subscribe to that magazine, but someone gave me a copy. And what has really surprised me is that this property boom that we're seeing in New Zealand has been mirrored throughout the world in all the first world type countries, all the rich countries, as they say. So Germany prices have gone ahead by 11%. Britain, their prices are up. Korea, South Korea, some big parts of China, they've had to put a halt on property lending processes like they should introduce here with LVR type rules because the property market had taken off. America prices are going through the roof, and everyone has put it down to the interest rate environment because you can borrow now at such a cheap rate. I think lending rates in the States are 2.9% for a 30-year loan. You imagine that, 30 years at 2.9%. Over here, they're 2.5%. You know, okay, you can only fix for about 2 years. But it just means that property now has become so affordable. It's within reach of people. And all that's done is poured this massive tsunami of money that's looking for a home into real estate. But not only that, because interest rates now are so low, you get no return out of the bank. So where people are going to be chasing returns elsewhere, and really one of the only places they look is either the share market or real estate. So many people I know have been scared off from the share market in the past. Everyone's been burnt at some point or another. So real estate's always been a success story, and people love that bricks and mortar feel. Interest rates are supposed to stay low for a very long time now, and there's no reason that they're going to increase. Reserve banks signal that they're going to stay down forever. But will property prices keep ramping up? Somehow I doubt it, because they've got the LVR rules, loan to value ratios, and they're talking about reintroducing those, and I think they probably should do it immediately rather than wait. Because in 2016, when they first introduced LVR rules, they did it incrementally. They started with a 20% rule, and that had an effect for about a month on the real estate market. It dipped a fraction, then it took off again. Then they raised them to 30%, and it dipped a bit more, and then they took off again. And then they finally raised them to 40% for investors, and that really stopped the market in its tracks in Auckland. The sooner they get off their chuff and actually introduce those LVR rules again, the better. And as soon as they do that, and if they go back to 40%, which I think they probably will, I think that'll stop the market in its tracks. But it depends how they decide to implement it. You know, will they only chuck 40% against investors, or will they put it across the board, across all property buyers, which will kill first home buyers, of course. And we actually, I think, want to stimulate or keep first home buyers active. So it's all about money availability. You know, you make that money available at such low interest rates, then all it can do really is stimulate the housing market. But if they chuck in LVRs, even if they raise them to 50% for investors, that'll absolutely kill it. That's working wonders, because if you know, since the Auckland Unitary Plan has been released, there's been a massive amount of multi-unit type housing, terraced housing, walk-up apartments, all sorts of stuff being built, which has been great. It's given far more affordable options, choice to the market, and a lot of those houses are priced in the what I would call relatively cheap price bracket, 650,000, maybe up to 700,000, which is far more affordable. And yes, they're on tiny little plots of land, and yes, they might be a terraced home, but at least, you know, it is a nice product. And it is at an affordable price level, and I think it's been wonderful. And there's so much of it being built at the moment. Building consents have gone through the roof in Auckland in the last couple of months. In fact, throughout, I think this year and last year, we're almost at record levels. If COVID hadn't come along, I'm sure that this year probably would have been a record, all-time record, potentially for Auckland. And a lot of those consents are in that terraced house or unit type configuration. Well, you would think it had been slowed, but I haven't seen any sign of it, because you take a drive through any of these new developing areas like Drury, Flatbush, they're just going gangbusters on constructing this sort of stuff. You take a drive through Te Atatu, Henderson, even up here on the shore. They're just bowling over homes, and before you know it, there's 5 little new homes being built. And so long as they've got community facilities around them, like Hobsonville Point's a classic case where they've done it really well, structured around lots of parks and walkways and reserves and things like that. So you're quite successful. Auckland's median house price now has hit $1 million. Sales volumes have gone through the roof. I think last count was about 3,250 sales for the month of October. And I keep a vague eye on this every month. Essentially, if the sales are close to or approaching at least 3,000 a month, that means we're in absolute boom territory. So in the boom years of 2014 through to 2016, we were consistently averaging at least 3,000 sales a month, and that was a real strong boom period. And in the boom prior to that, in the early 2000s, it was exactly the same story. So currently for October we did 3,200 odd sales. So yeah, back into real boom territory. Whether that'll carry on or not, hard to know, but they tend to last for quite some time. So I'm picking November will be equally strong. December won't be, because December, January are always quiet months. Yep. And days to sell have dropped to about 30 currently. Last count, which is also getting down. 28 to 30 days is a sign of a really strong market. When you drift out, 34 is more the sort of medium to long-term average, 34, 35 days a month. Just about everything seems to be going by auction, and I think the auction clearance rates have improved dramatically. In 2019 they were terrible. They could hardly, they were getting about a 30% clearance rate. Well, we had a massive migration surge just prior to lockdown, and I think through that initial period of lockdown, where so many Kiwis returned home, there was a massive surge then, but now migration has actually stopped. I think the last stats I read, we actually had a negative outflow of about 30 people for the month of September or something. But I read an interesting thing the other day. They reckon there's 250,000 Kiwis who actually want to return home and live here now. So that potentially is another huge number of people. And then once travel restrictions get lifted a little bit, there's potentially another whole bunch of the rest of the world who want to come and live in our nice, safe country. So look, maybe investors are, expecting another tsunami of migration gain in a year or two. It is quite astonishing how resilient the market has been. It really is. It's amazed everybody. And I just can't see that stopping in the short term.